What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock, specifically the technology platform Galileo. This segment of the business right now makes up about 17% of overall revenue, but SoFi plans to grow this business to one third, 33% of overall revenue, along with lending and financial services. You need to realize that this company was acquired back in 2020. We're talking about Galileo for $1.2 billion. And they acquired another company called Technisys, trying to build the AWS of FinTech, a fully digital stack for other companies to have, payment processing, card issuing, fully customizable banking as a service. And that is exactly what SoFi has been doing the last 4 years. And I believe right now SoFi is about to hit the breaking point, and Galileo is going to absolutely start exploding because they have built out the technology and now it is time to scale the product. So I believe now is the time to start talking about Galileo, because this is how SoFi is going to get a hybrid multiple, that technology multiple that we are looking for, because nobody else is doing this right now the way SoFi is trying to do it. They are trying to become the AWS of FinTech. They are going after massive large players after going after small FinTechs, the past couple of years, but those FinTechs have got really hammered by higher interest rates and their growth stalled, and some of them went out of business. SoFi wants to get more consistent revenue streams with these larger banks that have, more customers, and all these banks are living on outdated core technologies, and they want to migrate them over to newer, technology, newer core, so their customers can have a better experience, and that those banks overall can save more money, cost effective. So this is what SoFi is trying to do. In the last 2 years, Galileo has struggled in overall growth, but I believe right now they have scaled the product to where they want to be, and they are about to start landing these larger players. We're talking about top 10 financial institutions in the world, guys. So what we're going to be doing in today's video is listening to the SoFi management. We're talking the CEO of Galileo, Derek White, CEO Anthony Noto, and the CFO Chris Lapointe, guys. Every single one of these guys are going to be talking about Galileo and where they see the business headed over the next 1 to 2 years. And a lot of these videos you are about to see, they are talking about moves that they've been making the past 12 to 15 months, guys. And I believe you are about to see those moves on our 2024 revenue streams. And we're going to see Galileo hit new record revenues. And I'm talking in the 30 to 40% range is what I think this company could be seeing. And that is going to get us up to a hybrid multiple, because last year we just saw revenue growth year over year in the 13% range. So strap into your seatbelts. This is going to be an amazing video. If you find any of this information useful, be sure to smash the like button. Don't forget to drop a comment, and don't forget to subscribe to the channel. We're going to be keeping you updated on all the breaking news with the SoFi stock. Let's get into it.
We're doing it today. We have over, as I mentioned, we have over 100 million end users on our platform, operating across 150 brands. SoFi is one of those brands, and that's a direct-to-consumer business. We've lost no major customers in the 2 years that SoFi has owned Galileo. If that isn't validation of the opportunity, not only that, but we're adding 40 to 50 new clients, new businesses like SoFi, like Chime, like Robinhood, and others that operate on the Galileo platform. They look to Galileo and now Technisys as an opportunity to leverage best-in-class, world-class technology instead of building it themselves, because these businesses are not easy to build, Jim. That integration into the infrastructure of money as to how money moves across markets and between individuals on the payment processing piece that Galileo does, or in the core banking platform that is an extensible platform that Technisys has built. Those businesses are not easy to build, and many have attempted and tried and failed, and they keep coming back to us because of the world-class technology and the capability to build it. And we also see that the likes of Google and Amazon and others have been very successful in building their web services divisions. So each business and each one of our clients calls on us for different services, whether it's the financial products, the technology products, or services that we offer.
So was the Technisys deal more about not only their customer base, but the fact that they really expanded the services that you could offer to all of your clients?
Yeah, it's a beautiful trifecta now, Jim. It's the combination of SoFi having a banking license and having the ability for us to offer products through SoFi. But then it's also, and being able to leverage the SoFi banking license to be a sponsor bank for our clients. But then it's also the payment processing business that Galileo has and the core banking platform that Technisys has. The bringing together all three of those in a unified full stack for our clients, so they could literally come to us. And Jim, if you come to us and say, you want to create the financial brand bank, right? If you come, and turnkey, we can offer you the end user interface, the payment processing, the connection into the infrastructure of how money moves, as well as the core banking system and ledger, all in one full stack, customizable, differentiated by you, and DIY-able by you.
The demand within the technology platform segment is as robust as we've seen. Strategically, we pivoted away about a year and a half ago from signing up a high number of accounts each quarter that would have low volume to focusing on larger customers that were more durable and that could not just survive the economic cycle, but that also could be durable through the lack of financing in the private market. In addition to focusing on larger customers that are more durable, we started to build out other verticals such as the B2B channel. With the products that we had, they serve both B2C companies and B2B companies. In addition to that, we focused on non-financial institutions that have large customer bases and financial institutions that do have large customer bases as well to get to time to revenue much faster. We'll start to see the benefits of that slowly, gradually hit the revenue number over the next 18 to 24 months. It won't be a step function at all. I don't want to mislead anybody there, but it'll be a nice steady climb on a nice steady slope. The results of our strategic switch are really paying dividends. And right now, we're in RFP stages with a number of large financial institutions. We've actually won a regional bank deal that's one component of a larger piece of their business that will come on over the next 18 to 24 months. But the pipeline is very strong in both financial institutions, incumbent banks, and non-financial institutions, as well as B2B. And so the growth prospects that we're expecting there have really started to come through in a much bigger way as many institutions are under pressure to upgrade their technology and to go after new growth opportunities.
We're going to move to technology platforms. So I think a good place to start is just to hit on some of the household names that are already working with and have been working with Galileo or the tech platform for some time, just to bring it to life. Maybe if there are a few that you could share with the audience and what you're doing with them.
Yeah, what I would say is we've had really good growth in terms of end customers and customer accounts on the platform. We're at 145 million, and that's been growing quite consistently. We don't disclose, obviously, all of the customer names that we work with at Galileo for a whole host of reasons, whether that's competitive or desires of that customer. But what I would say is we've had great success over the course of the last several quarters, as we've mentioned, signing up a number of new customers. We did a large POC with a top 5 U.S. bank. We just signed up Experian, and that's progressing really nicely. So while I can't go through all of the customer lists, there are a few there for you to go with.
That's a good highlight.
So guys, you heard all of the leadership and exactly what they are trying to do with Galileo over the past 4 years. It's a transition phase that they're doing right now, going from small fintechs to large, durable, legacy banks. We've heard Anthony Noto say that they have landed large regional bank deals, and then you heard CFO Chris Lapointe talk about potentially going into proof of concept stages with top 5 legacy bank institutions. We don't know if they've landed those yet, but you can see exactly the direction that SoFi is headed into. But with the guidance that the management has put out, 25% growth compounded over the next 3 years, guys. SoFi is a very conservative management team, okay? So I believe these numbers could be extremely low from what they are actually seeing. I mean, we could potentially be seeing 30 to 40% growth over the next 3 years. But I just want you guys to see the last 8 quarters, 2 years of what SoFi Galileo has been going through and what we could potentially see for, new types of growth for 2024. So you guys can see we have all of 2022 and all of 2023. Revenue was at 60 million Q1 2022, and then they acquired Technisys. So that's why you got the 23 million ramp up out of nowhere. So that's like type of revenue Technisys was bringing on, probably like 80 million a year. And then you could see, they had to do a lot of migrating, a lot of cutting jobs, hiring new people and stuff like that. So the growth was pretty much, terrible as far as revenue. Maybe not customers. They still grow customers, but it's all about monetization, and that's not where SoFi has been hitting where they need to be hitting on. They haven't been doing monetization, growing the revenue stream. So guys, take a look. You can see right here, 84 million in 2022. So 1 million up for Q3, another 1 million up for Q4 2022. So just, awful growth for 2022. You have to be realistic, guys. I mean, we're talking 1 million for 2 quarters straight. And then I know Derek White said they did not lose a client at the beginning of the video, but they ended up losing one larger client, which was called Current. You can see that was a $8 to $10 million decline that they saw in Q1. And then they had a bounce back of 10 million. And then you can see growth stalled out again at 2 million. And then from what I've been hearing, a lot of people are liking what they're seeing as of Q4, a plus 7 million jump. So just thinking about if SoFi can maintain this type of growth at 7 million quarter over quarter, I know it doesn't seem like a lot, but it truly is when you're getting recurring revenue streams. So guys, take a look. 2022 revenue was 315 million, and 2023 finished out at 352 million. I put this at a D minus, D plus on my Twitter, guys. 12% growth. This is not what we want to see to get a hybrid multiple. This is not the AWS of FinTech at all. I think this was more of giving these RFP stages to these larger banks for them to see the product. And the ones that sign on, we're going to start getting those revenue boosts immediately. And that's what Anthony Noda said they're going to be seeing the next 12 to 18 months. So 2024 should be a great year if they landed a couple large players. You already heard they landed a regional bank deal. So just assume that we can get this 7 million quarterly jump, maintain that. Not saying going up or down, just maintain this last quarter of growth. We're going to be looking at 103 million in Q1, 110 million Q2, 117 million in Q3, and then 124 million in Q4, guys. That'll bring our revenue out to $454 million. That's 29% year over year growth. Guys, that brings us back up into the B minus range when you're talking right at near 30% growth. So this would be absolutely amazing if we could see this. I put this at a B minus, but let's just say we may get a faster growth story, maybe 10 million quarterly jumps. Guys, we'd be looking at 106 Q1, 116 Q2, 126 Q3, 136 Q4. That puts us at 484 million in revenue, guys. That's 38% year over year growth, from 2023, guys. That is going to be absolutely amazing if we can hit either one of these. And, that's going to have to do if we're landing top 5 banks, guys. These numbers are going to get absolutely smoked if we're landing these types of clients, I believe. So this is what is going to make SoFi get a hybrid multiple, and you're going to see a PE, in the 40 to 80 range is most likely what's going to happen. The same thing you saw with Amazon in the PE range of 80 to 90 the past, 5 years or so. So this is what we want to do. We want to get out of this, complete banking multiple. Even though SoFi has an amazing overall service as a bank on its own, we need to get a further hybrid multiple. I believe the stock is undervalued right now, even with this type of growth at about $16 price target. But guys, if we get this growth accelerating into the 30%, potentially 40% range, from what we're hearing from the management team, this is where SoFi could absolutely explode. And if you found any of this information useful, be sure to subscribe to the channel. We will be keeping you updated daily on all the breaking news. My name is Kyle. Have a great day.